I'm speaking with Sid Jain in this episode. He's the head of insights at Gain.pro, where he leads a research team focused on private equity intelligence, producing in depth analysis and reports on market trends and investment opportunities in Europe. Before joining Gain.pro, Sid worked as a senior analyst at Chart Mogul. And at JP Morgan, Sid spanned several roles, including vice president, product manager, data intelligence, associate strategy and operations, data and applied AI. He's also an analyst in equity research. Sid, welcome to Getting to AHA.
Thank you so much. Really excited to be doing this.
So I'm really interested in talking to you because you do some interesting work. And you've had an impressive journey working with data across industries like finance, AI, and now private equity intelligence. Can you share which aha moments first sparked your passion for data analytics?
Probably like we are a data heavy family. So my father is a chartered accountant. My grandfather wasn't into that. So it like I started investing in like stocks and looking at stocks in my 10th grade. So it was always very data heavy. But like it was my first job at EXL, and we didn't even cover that. That was like very consultant heavy. Got introduced to Excel like the first time, and all the pivot functions, all the shortcuts, and just the like ability to like look at the data, find that unique insight, kind of like really yeah, it really energized me, and that's what like from there on, it's always been a really good data journey for me.
Interesting. So tell me a little bit about what you do, if you don't mind.
Sure. Well, so right now, I lead the insights function, as you mentioned, at Gain.pro. Gain.pro, like we have data on like every private and public company out there on our platform. My job is like very simple: look at that data and find interesting insights. Right now, like we are predominantly focused on private equity insights, but like expanding into maybe VC next and public markets next. So who knows? But right now, like very much focused on private equity, and that too in Europe.
So before we get into how you do this, I'm curious. First of all, how do you define insights?
Insights, yeah, that's a good question. That makes me think. Uh, Insight is something that is valuable to know, comes from the data, and something that probably you knew before but had a hunch, so like couldn't support it with data, but now data supports that. So that is one insight. Or the other part of insight that we look for is something that's counterintuitive, like you expected it to happen, but the data tells otherwise. So that's what an insight is to me.
So tell me about you look at companies, the data, published data, maybe some private sources, and so you're looking at quantitative data primarily, correct?
That's correct.
And have you found a way that you get these insights from the numbers?
One kind of counter example like that brings to mind is like one of our most popular reports is the largest PE investors in Europe. There isn't like good broad report on largest investors. So what happens is like how do you rank like these investors? Either you rank by the funds they have raised across their or the AUM. But if you look at like BlackRock, right, it's quite a global firm. And how do you know how much funds they have raised in Europe or UK specifically, or within UK, like within the TMT sector? So it kind of gets quite challenging when you need to segment the data a bit. And what we were able to do kind of uniquely, and why it has resonated a well like these reports, is we have been able to look at the portfolio of some of the investors. So like look at BlackRock and look at their portfolio within Europe and kind of estimate the AUM they manage, or the EV they manage based on that portfolio. So that's been a different approach that we have worked with data. So we have had to like work with a lot of missing data, estimate some numbers, but in the end, like we get to your earlier point, and insight, or like a way like that we didn't necessarily have before. So a segment of that cut.
So do you use any qualitative data, or is it all quantitative?
Yeah, so usually it's all quantitative. I really like playing with it's not big data, but like in some sort of big data in terms of like the tools that we use, right, to do our job. So we have a database that's stored in like SQL, BigQuery, and we just like put that data in a Jupyter Python environment, write a bunch of code, and like in some sense torture the data to get the insight. So that's what the process looks like for us.
And have you found a way to, I mean, to me, a lot of times when you're dealing with data, you're just swimming in lots of numbers and often there's noise. How have you figured out a way to kind of filter out the noise?
I think like with data first, once you initially get the data, you need to one explore the data. So get a good handle of what we say in data language, like what's the level of the data. So do a little bit of exploratory analysis, like which fields have missing values, which fields have like outliers. And then like there are ways to kind of negate those outlier effects. So to give you an example, right? Like in public markets, we have a price to earnings ratio, or we might have a EV to EBITDA multiple in private markets. Now, if you take the average of those multiples, like what might happen is sometimes EBITDA is like 0.1 million and like EV could be like 100. So that goes to 1,000 EV to EBITDA. But like if you take average across maybe sectors or regions, that clearly would be biased because like there are outliers. Whereas if you take like a median, that might be less biased. So you need to come up with these ways where maybe you take some other metrics or you cap some of the outliers. So it's like you just need to work through it. It's just like to your earlier point, right? Like we need to be aware of those outliers and do a lot of those case studies to figure out like what's with the data. Like there are yes, sorry to keep going, but like there are many times where like we find errors and it's about like cross validation, going a layer deeper and finding those not like wrong data, but data that kind of misleads.
I would think that a lot of times you're not just looking at the numbers, you're trying to interpret the relationship between numbers, correct?
Yeah, that's correct. So how to tell a story. So like one of the projects that we are working on right now is if you look at private equity, right, like PE spans a lot of sectors from industrials to services to TMT to healthcare. So what we want to find, like an exploration that we are doing right now is how has that sector mix changed over the years? So in 2010, like what did the sector mix look like? In 2024, what does the sector mix look like? Intuitively, probably you can say that like with the rise of tech companies, probably more PE firms are investing in TMT. And that's what we want to prove with data. Like how much has that needle shifted? And like are there firms that are specifically focused on the TMT vertical? And intuitively, I know the answer, but like, can you quantify that with data?
And then when you look at these companies' reports, you're looking at their data, but how much are you also looking at what they actually say in their, calls with analysts as well as on the reports?
Yeah, so personally, like I don't go into like analyst like what companies say on the report. I just look at the high level numbers. It's probably just how my line of like my thought process works. Like though you'll find research firms that do a lot of sentiment analysis and try to extract it, it's just not my forte.
But I would think, and since you're looking at numbers, you probably it's better for you to be looking at over time, like several years, versus just 1 year or one snapshot, correct?
You correctly pointed out it's like with data is always better to compare versus history. I don't know if you have looked at that like Slack growth versus Teams growth chart. If you look at like Slack growth chart, right, it's kind of exponential growth. But now if you overlay Microsoft Teams growth, that's also exponential, but that's like exponential at another level. So with data, you always should compare versus like a peer group or some other metric, and also look at history. Finally, like what we make a point to do with data, right, is also to dive a little bit deeper like, at a segment level. So it's just not like looking at the broad averages, but like within those few subsectors or within those few segments, like what does the data say? That's kind of quite crucial to do.
Interesting. And what role is AI playing in the work that you're doing now?
There isn't a day that goes by when we don't use ChatGPT or Claude or AI solution. So it's been a it's been a massive game changer for us. And personally, in my workflow, I use ChatGPT every day. And initially, I used to spend so I'm an engineer by background, but I don't have a master's in computer science or a computer science degree. So I kind of struggled with writing a bit of Python code. But now with ChatGPT to my disposal, I don't need to spend hundreds of hours in Stack Overflow logs trying to figure out a code. I can outsource that a bit to ChatGPT. So that's been one of our primary use cases. And I don't feel stunted in that respect. So I have a hypothesis or I have a question that I want the data to ask. And instead of asking a developer or another data scientist to do that, I can ask ChatGPT and get to those answers quick. So it's just accelerated the process for us.
Have you found some common ways that companies try to hide things in their data? Maybe they're trying to hide bad news from getting out, but have you figured out a way to cut through that and see?
Probably it's no secret, but cash flow numbers are more trustworthy than income statement numbers. So, and if you look at it goes to my previous work, one of the best factors in equity research or public companies is if you look at the free cash flow yield, right? You can't fool someone by telling how much cash or how much dividend you pay. So that's kind of hard numbers. Whereas something like EBITDA, that's EBITDA or depreciation, that's kind of up for maybe a little bit of discussion, or there is a little bit more leeway there.
Maybe you would walk me through how you, let's say, analyze company ABC, let's say, for example. I don't mean the real ABC or anything. I'm just as an example, and how you interact with studying their financials and also using AI at the same time.
It's important to think about what your goal is when you're studying the company, or what type of investor you are. So if you think about the different types of investor, right? So there is a VC investor, there's a private equity investor, there's a public markets investor. Within public markets investor, there's a day trade, there's a day trader, there is a 2-year investor, there's a a lifelong investor like a Buffet or Munger. So it's kind of for one, you need to figure out what you are looking for that in the company. And then, for example, for a venture capital investor, right, the only thing that I'm looking for is growth at that stage, or the pedigree of the founder, or what previous companies he has worked for, what success he has. So that's kind of what I would look for if I'm a VC investor. If I'm a private equity investor, probably I'll look at the EBITDA or cash generation. So if I want to go and raise more debt around it, or I'd look at their revenue growth or leadership. So that's what it's not only about revenue growth, but I also need profitability. If I'm on the other side, if I'm a public markets investor, I would also look my criteria again changes. I would look more towards cash generation side, and in addition to growth and revenue metrics. So that's what I'd say. Personally, I'm a I read a framework somewhere where if you need to look at just two metrics and figure out whether the company is doing great, you look at revenue growth and you look at return on capital employed. So if a company is growing well and it has high returns on capital that it employs, you that's kind of a long good term investment. So that's yeah. If I'm given just a stock and find a view, I'll just look at those two metrics.
So you look at the data, you use AI to help you, but then at the end of the day, you have to convert all this data into a narrative or a story, correct? And how much of that is actually a narrative versus actually weaving a story of what's really going on?
It's a mix of both. So what we are trying to do is figure out how has PE entries changed over time. So what's the sector mix? So we have a hypothesis, right? So we already have a story in mind that we want to like we want to put together that T entries have actually changed and there is a rise of niche investors. So we are trying to look at the data. But when we also look at the data, we also find counterintuitive or things that we expected to happen but didn't happen. So an example is like there are specialist tech investors in the P land like HG or Thoma Bravo or TA Associates, but there are not as many specialist industrial investors or services investors like that are quite big. There are consumer, but like those are kind of just the two sectors where you have a lot of specialist investors. But like we expected there to be specialist investors in maybe all the sectors. So that's kind of now the data telling the narrative rather than the narrative telling the data.
Yeah, yeah, interesting. And so, what trends are you seeing now happening in businesses when you're looking across many industries and stuff? Are there any trends you're seeing that you want to keep an eye on in the future?
Yeah, so in terms of like, I'll focus on the European side of the market, given our data is stronger there. So what we saw was 2018, 2019 was like a good stable growth year. But then like COVID hit and everything like fell off the cliff. And then you had like this big stimulus, big boom. And 2021, 22, 23 like were really strong growth years. But what we are seeing right now is maybe a little bit of slowing down of that growth and things normalizing. So that's what we are keeping an eye on as well. The other thing that's important is like looking at margins and how that revenue is turning into the bottom line, and that's been like a really good story as well. Like where we have seen increasing margins, and that's stabilized a bit right now.
And you see that trend continuing.
Yeah, I think it's going to be hard to expand margins from here on. Like clearly, margins are at or near like some of the peaks, and I feel it's just going to be hard, like with inflation still being steady, in my view.
So where do you see yourself focusing in the future? What area of analytics would you like to study more or get more involved in?
It was quite a journey, like coming to the realization that I like to do insights work or like looking at data and like finding those insights. So if you think about my career journey, right, I started as a like a research analyst slash consultant within the data world, but then I did spend around three and a half years in strategy slash project slash product management land. And it was, frankly, it was a little bit hard. I was performing okay, but like I couldn't say that I was performing within like top 10% of my class or top 5% of my class. And those were hard years. Like I had to reflect a bit to figure out like, can I become a top 5% product manager? Like, can I become someone like Shreyas Doshi, or can I become someone like can I become a head PM at a company? And out of those reflections, the answer was no. And I used to maintain a journal. Like every day, I used to like journal and write down like what are the things that gave me energy and what are the things that like sucked the energy out of it. And there like was born a pattern where like I was energized by analyzing data. Like it could be any data in the world. It could be like a public company data. It could be healthcare data, any data, and like finding those insights. So I pretty much feel at home with my role and the nature of the job that I have.
So let me ask you, if now that you've been in the data analytics field for a while, what would you tell a younger Sid who's just entering the field in terms of three tips you would give a 20-year younger Sid as they're entering the field of analytics?
A 20-year-old me, like a 20-year-old younger said, entering the field of analytics, I would say follow what gives you energy. Like to my earlier point, do a lot of personal projects as well. Right now, you have so much data that's available publicly. Just go out there and analyze that data and like publish a like a blog or a research report. So that's kind of advice number one. So you explore the data, publish research reports. The second would be to get better at storytelling with data. So there is a lot of chart junk that goes out there. Like there are a lot of bad charts go out there. Just be intentional about how you want to communicate the insights using like good data storytelling. I think it makes a world of difference to the reader. Like if you get in helping them understand the story.
Can you give me an example of what you're talking about, number two there?
Probably you have seen like these spider charts, and those charts, though they look fancy, they don't communicate the insight that well. Also, we have a habit to overcomplicate charts. So we want to have like a lot of stat bar charts, and then like a bubble chart within, and then like a median number within. Instead of like wanting to show everything in one slide, my recommendation is to like split it up. Like digital, like we don't print a lot of stuff anymore. So like you can like create a bar chart in one, like show a trend line, a line chart in another. So try to pick the story from there rather than like just being a spaghetti soup of data out there. Number three would be, don't worry about what tool do you use to do the analysis. In the end, the goal is to find the insight. The goal is not to find the insight using Tableau or Excel or Power BI. The tools are the means to reach an end. It's not the end itself. So like just get started with any tool that you have. They're all really good.
So, if you could have lunch or dinner with anybody in the field of analytics, who would it be and why?
I would have lunch with this famous investor. I don't know, maybe not as famous in our circles, called Jim Simmons. He used to run this Renaissance hedge fund, and he used to build like a lot of quant models, and was one of the best performing hedge funds. Probably I'll have lunch with him.
Sounds interesting. Well, it's an interesting field that you're in, and I appreciate the stories, examples, and insights you shared with us. Thank you very much, Sid, for being on the show.
Thank you so much. I really appreciate the time.
Getting to AHA was brought to you by iResearch. To find out more about us, head to iResearch.com and make sure to search for Getting to AHA in Apple Podcasts, Spotify, and anywhere else podcasts are found. And don't forget to click follow to ensure you don't miss any future episodes. Thank you for listening.